Good afternoon to our Tactive advisors out there. This is Rick Dwyer, Chief Operating Officer with Tactive. With me is Keith Snyder, one of our strategists with MarketGauge. How are you doing today, Keith?
Excellent. How are you, Rick?
I'm doing great. As we do every week, we're just going to go over a couple things with respect to the market and other things. So number one, the Feds did raise the Fed's rate by another 75 basis points. What is MarketGauge's outlook on what that's going to do, and both in the, let's just say, over the course of the summer?
Well, we're still thinking that there is another hit to the market that's going to take place, and this is sort of a mean reversion type rally, which is pretty classic in bear markets. You get vicious rallies. And the question is just how far it's going to go, but longer term trend is still negative.
Okay. And do you have any thoughts based on Powell's recent statements? I think, yeah, the day before yesterday and yesterday on what they're going to do with interest rates. You think they're going to be aggressive still, or you're not sure?
Well, I think it's an interesting dilemma that the Fed is in. Obviously, when they raised that 0.75%, you've got a situation where the market was not happy, and we had probably the most severe drop in a few days that we've ever seen. So we're talking about a historic rise in interest rates. I think people are focused on 0.75%, but if you look at the history of rates and the speed and the magnitude on a relative basis, we're hitting historic levels, right? So we were basically, if you're looking for a mortgage and you just use that as a proxy, interest rates went from 2.5% to 3% to 6% in 3 to 6 months.
Yeah,
that is a very short time frame. And looking at interest rates going back historically, I don't think we've ever seen anything double from the level it was. Even going back to Volcker, rates were, 8-9%. He bumped them up pretty fast in 4 months to 16 or 15%. So, that was, in terms of absolute numbers, maybe a 50 to 60% rise, as opposed to a double in a similar time frame. So I don't think all of the shocks have been truly felt yet. And what you're getting here is a relief rally.
Okay, well, thank you for that. One of the things that we focus on Tactive, and I think the strategists that are on our team, focus on as well, is trying to minimize damage during these big drawdowns, and we call that drawdown aversion. So how would you characterize how MarketGauge looks at drawdown, and what are some of the things that you guys over there do to try and minimize it?
Well, we're very big proponents of risk management. We came from the floor, where as members and owners of seats on the exchange, literally you can get 99% leverage. So for every $100,000 that you're trading, you only had to put up $1,000 in your account. So that meant small risk, if you were fully leveraged, would wipe you out, which, by the way, I saw fairly frequently. It looked like people were brilliant, and then things didn't work and they were gone. So we strongly believe in risk management, stops, targets, and that's a key component of everything that we do. We don't want to take tremendous hits. Managing risk comes first. Being wrong in a small way is to me, the essence of trading, investing, and just the overall approach to the markets.
Well, thank you for that, Keith. So we're just going to wrap up like we normally do. How would you say MarketGauge looks at the market today? Bullish, bearish, neutral?
Short term, it's looking like it's got some more upside to it, but it will find some severe overhead resistance. And the question is exactly where. If you can look at the S&P, the Qs, and look at their 50-day moving averages, and that might be a normal level of resistance, may punch through it to fake everyone out and then fail, which is exactly what happened in a couple of weeks ago when the small caps started to look better. They actually firmed up, took out the 50-day for about a day and a half, and then collapsed. So that's pretty typical. Caused the most short-term pain and then reverse direction.
Well, Keith, thank you once again for your insights. We enjoy having MarketGauge as a partner and having you join us weekly. For our advisors out there, if you have any questions for Keith or the folks at MarketGauge, feel free to reach out to them. I'm sure they'd be happy to talk with you. Until next week, Keith, have a great weekend.
Thanks, Rick. You too.
Okay, bye-bye.
Bye-bye.